Fifth restaurant stock I'm covering is Qsr Restaurant Brands Inc. RBI operates the brands Burger King, Tim Hortons, Popeyes, and Firehouse Subs. It's the fifth largest operator of fast food restaurants in the world, behind Subway, McDonald's, Starbucks, and Yum Brands. It's a Canada-based holding company. Actually, this is an Ackman stock. He owns almost 24 million shares of QSR, with value of almost 1.4 billion dollars, comprising 13.41% of his portfolio at Pershing Square Capital Management, along with other restaurant stocks like CMG and DPC. I can say he likes speculative growth stocks. I mean, he owned Netflix for a while and lost what, $400 million. CMG is trading like a Tesla, very overvalued. DPC, from the last time I screened it, it's down 14%. I don't know about his process, but I mean, if he had bought these shares at cheap prices, then kudos to him. Anyway, let's look at what price we should buy QSR. QSR is currently trading at $51.73 with market cap of 23.39 billion and PE ratio of 19.19. They give out an annual dividend of $2.16 per share, a yield of 4.18% of the current price. QSR is now down 34% of the highest. First metric, we want an EPS multiple lower than 3. It's 7.11. It's expensive. Let's see if the PE is too high or the EPS is just too low. EPS is increasing, not very much, because look at their shares outstanding. They're diluting their shareholders. I guess it's the PE that is very high. Second metric, we want to pay $1 or less for 1% of the money they're making, meaning we want to pay 1 PE or less for 1% of their margins. Lowest margin I used here is 22.86, the 10-year average margin. I didn't use any of the net income margins or the profit margins because clearly there's a gap between these two margins, and free cash flow margin is more important than the profit margin. 0.84 multiple. QSR is trading at a discount right now. I used 40% margin of safety here for the stock just because it's a Canada-based company. I want some additional margin attributed to the exchange rates. Third metric is price to free cash flow. This is low at 14.68. So I guess QSR is cheap. Price to free cash flow ratio wise, although it's 1.31 times premium here. We want this lower than 1, of course, so we might want to wait and see if this ever gets to at least below 1. Fourth metric, they pay out 80% of their net income as dividends. Don't get confused by this. This is net income. You have to then translate this to free cash flow. 15% free cash flow margin is left when dividends are discounted. Historical data suggests it's trading at a lower PE now. PB ratio is near my threshold. It's 5.91, still a bit high. 0.92 current ratio. We want this above 1. Their debt levels are concerning. 14 years. You might want to look more into this because the capital list are not included here yet. This is the valuation summary for QSR. I think QSR is trading at a discount right now, only trading at 0.84 times their margins. Although, if I were you, I won't buy just yet. I'd wait for their price to free cash flow to match their PE. I don't own the stock. I don't think you should pay premium for the stock. My rating is a buy. Maybe hold some more. $61 is my fair value. $31 is intrinsic value. This is from Guru Focus. Here are my entry PEs and prices. 14, 16, 18 PEs. I could be a buyer of QSR at $48. This is my high entry price. Let's look at their charts. $60 is my fair values. $54 is 4% dividend yield. $43 is 5% dividend yield. $48 is my high entry price. So if you can buy it at 5% dividend yield at $43, that would be great, but I think any price below $48 is good for long term.